the average investor, when there's kind of markets as they are now, they should be trying to sort of sweat their assets in the digital asset space a bit more. So, make sure you are earning interest. It's like a really easy first step. Because, if we are going to trade sideways, you're missing out if you're not doing this.
On this episode of Early Bird, Phil Blows, the founder and CEO of the trading platform Accrue. Phil joins the podcast today to talk about how to earn interest on your cryptocurrency and how his company went public. If you're an investor looking to stay on top of the latest market trends, then you're listening to the right podcast. This is Early Bird, and I'm your host, Stephen Lerner. Before we get to today's discussion, let me tell you how you can save time and beat the market through Early Bird, a free daily email newsletter featuring commentary about the latest trends in stocks, cryptocurrency, and equity crowdfunding. Early Bird is designed to help individual and non-professional investors stay on top of all of the critical investing trends. The newsletter is 100% free and is sent to your email box each weekday morning. Subscribe to Early Bird for free at www.earlybird.email. Once again, that's earlybird.email. And now, today's discussion. All right, Phil, thank you so much for joining us today on the Early Bird podcast. How are you doing?
Very good, thank you. Pleasure to be here.
It's great for you to be here as well. I believe you're the first CEO of a publicly traded company to be on the Early Bird podcast. So welcome.
Wow.
I think that's great that you're here.
It's an honor.
We're going to talk today about your company and, of course, earning interest on cryptocurrency and why that should matter for retail investors. But before we take a dive into that, Phil, tell the audience a little bit about yourself. If you could give a brief 30-second version of your biography, that would be great.
Yeah, sure. So I currently live in London with my wife and two young kids, so a 1-year-old and a 3-year-old that keeps me very, very busy outside work. But in terms of my background, I've been in sort of traditional world of finance, specifically kind of trading and broking. So I spent about 10 years as a long-short equity trader, sort of doing market neutral strategies and things like that. Then a bit of time in broking before kind of moving into a couple of startups, which culminated in founding Accrue in early 2021. And we went on a bit of a kind of rocket ship from day one. We raised a seed round of just about $1 million, and then effectively went public via what's called a SPAC, which we can dive into in kind of October of last year, and then raised kind of another £10 million in the process.
Well, incredible journey, from startup to publicly traded company in such a short period of time you have there, Phil. And especially with what the company does. You help investors, including those retail investors out there, earn interest on their cryptocurrency. It's something that some investors may not be aware of. In a nutshell, what does that mean when you earn interest on cryptocurrency?
Well, I mean, I think maybe just reversing up a little bit. We when we founded the business, we saw that we were quite active in the cryptocurrency space, and we found some great ways of just earning interest, of depositing your crypto in what's called decentralized finance, which is kind of the normal finance, but without the intermediaries. But what we very quickly discovered was there are these amazing yields you can earn on holding Bitcoin, holding Ethereum and what's called stable coins, which are cryptocurrencies that track the value of the dollar. However, it's extremely complicated for the everyday individual to sort of actually engage with these protocols. So the idea that they would have to open up their own kind of wallet and then fund it with Ethereum and then connect it to a DeFi protocol, you've lost 99% of people. So really what we do at Accrue is we've designed a really customer friendly app where any user can go on, they can deposit normal money, and with a click of a button, convert it into Bitcoin, Ethereum, or one of these stable coins, and then start earning up to sort of 12, 13, or even 15% in whatever base currency they choose. So if someone deposits Bitcoin, for example, they earn interest in Bitcoin. So regardless of, the fluctuations, they're sort of holding more and more Bitcoin over time. And it's the whole idea was, can we just simplify the whole process and make it, safe, secure, and just understandable to the everyday person?
Fantastic. So how does it work in a nutshell?
So, I mean, in a nutshell, someone deposits normal currency or an existing kind of portfolio of crypto. It goes on a platform, and we effectively lend it on their behalf to to institutions. So we have a big diversified pool of places where we can deposit these funds and generate interest from them. And that's sort of where the experience of the investment team comes in. We've got one of the most experienced teams in crypto. We've been investing for institutions, helping institutions generate yield on their crypto for really as long as you've been able to do it. You're effectively building diversified portfolios of kind of like lended assets to institutions across the whole kind of world of decentralized finance.
Oh, wow. So that's kind of how it works, basically.
Yeah.
So it's really interesting, earning interest on your crypto, and so the benefit, obviously, it speaks for itself. You're making more money on the crypto that you currently have. That's incredible. Are there any other advantages that come with it?
Well, I think, there's a big shift. A lot of people look at crypto and they think, I'm going to put my money in there and I'm going to 10x it in sort of like, a short period of time. And invariably people run after whatever the kind of the hottest thing is at any given time. And, it's incredibly difficult to do that. Some people do, and they're clearly the ones that you hear about. But, you don't hear about the scores of people who lose their money because they're either getting into investments that don't have much kind of inherent value, or, they're buying at the top and selling at the bottom, that sort of thing. So, the whole idea with, showing customers that, if you hold Bitcoin and Ethereum, it's more than just something you're trying to like hope appreciates over time. This is a credible asset class and it has real value, and there's people looking to borrow it from you to help their own sort of capital intensive businesses. So this is part of a kind of a long-term portfolio, and our belief is that over the coming years, 5-10% of the average kind of diversified portfolio will be in some form of digital assets, and probably a good point of Bitcoin, Ethereum, and a mixture of these sort of higher yielding stable coins. And I think we're already seeing that in the institutional landscape, where big institutions, even big banks are they're spinning up trading desks that only do crypto, and they are, and the reason they're doing that is because their big institutional customers are saying, look, what are you doing in this space? We know it's a good investment. We want to get involved. So I think what we're seeing is this is kind of crypto 2.0, where crypto 1.0 was sort of buy and speculate. Crypto 2.0 is like, how do I take these, what are valuable digital assets, and start earning, proper yields out of them, and building, professional portfolios with them.
Fantastic. I could totally see the benefit of that. It's certainly the acceptance of crypto with large financial institutions is incredible. What are some of the drawbacks associated with earning interest on cryptocurrency?
There's a few different things. The way that we do things, people effectively deposit their crypto on our platform, and there's this kind of big movement in the sort of the diehard crypto community, which is sort of like, not your keys, not your coins, which is, if you don't have like, if it's not within a wallet where you hold the private keys, then it's subject to be sort of lost. And I can see where those arguments come from, because there's been the road of crypto going all the way back to 2008. It's been fairly rocky. There's been a lot of big exchange hacks and things like that. But the market is very different now. So in terms of like what we do at Accrue, we use a company called Fireblocks to build our wallet infrastructure, which is kind of institutional bank grade custody solution, tech solution, which has been tried and tested. Everyone in the world has tried to hack it and has failed. It's done $2 trillion dollars worth of digital asset transfers. And also every wallet that's held with Accrue is insured for $30 million. So whereas before people sort of saw depositing their their crypto with a third-party custodian, which is what you have to do in order to earn yield through someone like Accrue. People saw that as a very much a negative thing. Now we're saying, well, to be honest, we're probably safer than your own wallet, because a lot of people misplace their keys, they're connected to protocols they shouldn't do, and they end up getting themselves hacked. Whereas with a professional custodian like ourselves, we can give a service and level of security and insurance that a lot of individuals don't get themselves.
Makes sense, especially people losing their keys to their crypto wallets all the time. You hear about on the news.
Yeah.
Are there any
awful stories like that? People going through like landfill sites looking for like $5 million worth of Bitcoin and stuff. It's dreadful. Yeah.
Are there any geographic restrictions for your platform?
Yes, there's clearly some in terms of like the sanctioned countries and where regulations don't sort of allow us to operate. But generally, we're building a global client base, and we're building a global regulatory footprint as well. Sadly, one area at the moment where we're not available is the US. I think we look at some of our competitors in the space who have operated in the US, and the landscape has been pretty unclear up until now. So, we don't directly compete with them, but someone like BlockFi, I think we saw them get a $100 million fine from the SEC recently. That kind of is part of the reason why we're waiting for the regulators to really give us some sort of certainty before we enter the US. But globally outside of that, everyone, we're onboarding customers from all over the world. It's unfortunate at the moment, given the sort of the lack of clarity, we're not onboarding US customers.
Hope they end up in the US someday. When we return, we'll hear from Phil about the state of cryptocurrency and how his company's stock has performed since going public. But first, let me tell you how you can become a more informed investor through Earlybird, a free daily email newsletter. Earlybird has commentary on the latest events and trends in stocks, cryptocurrency, and crowdfunding. With Earlybird's daily weekday email, investors can quickly stay on top of the trends and beat the market. Subscribe to Earlybird for free at www.earlybird.email. Once again, that's earlybird.email. And now, back to today's discussion. So, Phil, today we're talking about earning interest on cryptocurrency and about your company, Accrue, which is publicly traded. Before we talk about your company a bit, I just want to talk about cryptocurrency at a very high level for retail traders. It hasn't been a very kind year for cryptocurrency. The prices have gone down, especially in the first quarter. What do you make about what the current state of cryptocurrency is right now for retail traders?
Yes, we kind of peaked in November, and it's been a pretty nasty start to the year. We've been trading sideways from sort of like, we had this kind of breakout. We always use Bitcoin as kind of the barometer. I must say, when I saw Bitcoin kind of break above $45,000 level again, I thought we might have a decent up leg, but we've since pulled back a bit. I think if we really think about it, it's an emerging asset class which is remaining unbelievably resilient in what has got to be one of the worst macro environments for a very, very long time, with the prospect of nuclear war and rising inflation and interest rates, all these sorts of things, which is and then kind of the unwinding of QE and things like that. So it's been really resilient. And I think, are we going to see it suddenly break out and go nuts? I don't think necessarily we've got the kind of macro catalysts that are needed to really have a risk asset like crypto really go crazy at this point. However, I think as a store of value, especially when inflation is going as it is, there's significant value in crypto as an asset sector, and also looking at, in terms of just going back to the yields that you can generate, even if crypto trades sideways for the next 6 months, if you're able to earn between 7 and sort of 15% interest, you're kind of filling your bags, even as, the market trades sideways, you're kind of outperforming traditional markets anyway. So I think, for the average investor, when there's kind of markets as they are now, they should be trying to sort of sweat their assets in the digital asset space a bit more. So, make sure you are earning interest. It's like a really easy first step. Because, if we are going to trade sideways, you're missing out if you're not doing this. And then when markets do go up, you're going to have a lot more of the crypto that you hold. So it's going to, it's going to magnify the returns you make on the upside and soften the blows on the downside. So that would be the main thing at the moment. I think we're waiting for a big catalyst, and we've talked about the Ethereum merge. Well, the industry's very much talking about the Ethereum merge, which is kind of slated for later in the year. I mean, that could be the catalyst that we see. A lot of people, pay attention to that, and Ethereum might drive everything higher. So that's kind of, barring that, there's not a great deal on the horizon that, unless we see the war in kind of Ukraine, end, that might be the catalyst that really pushes things higher.
Yeah, you're right. Keep an eye on what's going to happen to Ethereum this year, for sure. Yeah. So your company, Accrue, it's very interesting. You went public in October, so not that long ago, and you went public via a special purpose acquisition company known as a SPAC, which is when a publicly traded company is created and then acquires and merges with an existing private company, in this case, your company. Tell me about that. How's it been for the company since going public?
So, one of the things we were keen to do, we were very keen to appear as credible and transparent as possible. And, that's why we went public so early. So, we wanted customers to be able to see, who runs the company, who owns it, what does our balance sheet look like, all those sorts of things. Because often when you're investing in the crypto space, you've got no idea who owns what, and what kind of financial situation the custodian of your assets is in. So, as a startup, although it was very, very quick, we wanted to get out there and be as credible as possible, as quickly as possible. So from that perspective, the SPAC that we've done has been, it's been really, really good value, because we're talking to institutional customers, and, we're going through due diligence, and often we're competing against other players in the space who just don't have the level of credibility that we have as a public company. So that's almost allowing us to win deals and win assets from institutional customers. Those are the positives. On the downside, the way special, SPACs are effectively set up is, they will list at a certain price, and they may even do a sort of a pre-IPO sort of fundraise in order to get the cash into the vehicle to begin with. So you've got to be really careful with how you structure the investors in the early kind of public company. And one thing we have found is, although we've done this SPAC, and we are starting now to talk about some really, really impressive growth rates. We've grown 100% as a business in the last 3 weeks, and we're onboarding customers globally, and it's the business is going crazy, but the stock's not moving. And one of the reasons for that is the stock's was trading sort of up at 3.5 pence, and there are investors though who bought in at 1 pence, and we're not a particularly liquid stock, so those early investors are just selling and sort of realizing profit, and they're not sort of in this for the long term. So I think what you'll find with a lot of SPACs is kind of the initial road, often depending on the shareholder base, is quite rocky. But you kind of need to clear out some of those shorter term investors and look for the real long-term sort of value investors that are coming in. They believe in what we're doing. They can see us, because I have no doubt in my mind that we're on the road to being $1 billion company, and we've got the traction to get us there. It's going to take us a while, and we need patient investors on board that are going to sort of support us. So I think that's sort of the public market is not kind of rewarding our business model at the moment, but I think we're making such big moves in the space that it's only a matter of time that people have to sort of take notice, I think.
Absolutely. We've talked, certainly if those who read the newsletter Early Bird, we've talked about SPACs before and what those companies are like. And Phil, even though you said, your platform Accrue is not available to investors in the U.S., investors in the U.S. are able to trade your company stock, right?
Absolutely. And, we're trading in the UK on the Aquis exchange at the moment, which is sort of one of the slightly more junior exchanges, but we're about to co-list on NEO in Canada, where, there's some, the reason we kind of picked that exchange is there's sort of several crypto businesses already trading there at really good multiples. So, we can then list on those exchanges, release our numbers and say, look, this is where we're at relative. And there are some clear comparables. So, this is what we should be valued at. And, I think that's going to be something that we're pushing on with, and hopefully we'll have sorted in the next couple of months.
Nice. I know you recently reported financial earnings not that long ago. Phil, what kind of outlook are you looking at for 2022 for your company?
I mean, one of the big things that we've got is, the way we generate yield, we do it through sort of decentralized finance. And, what that actually allows us to do is generate yields that are significantly higher than a lot of our competitors. So if we look in the space, you've got companies like Celsius and Nexo, and between them, they've got $35 billion worth of digital assets on their platforms. That being said, we are paying almost double the interest rates that they are on certain currencies. So, for us, it's not a case of, are we better? We know we're better. It's more a case of we've just got to get the market to know who we are. And, we are spending a lot of money on marketing to build the customer base. And then there is some serious low-hanging fruit there and assets that we can say, look, you should not have Bitcoin earning 3% when we pay 7%. It's a really inefficient market. So hopefully we're going to see that quickly, normalize as customers and sort of this, price discovery, they come over to us. So I'm excited about how we're gonna build a lot of assets on the platform over this year. But also we've one of the things which we've got a very, very talented tech team, and I was very keen to build kind of a way in which we can partner with Yield, and we've got this offering called Yield as a Service, which is where we go to existing crypto exchanges, which maybe are just they allow people to buy and sell crypto, but they don't allow customers to generate yield because maybe they don't have the capabilities themselves to be able to offer that to their customers. Using Accrue, and we've got a really easy to use API suite, they can simply just plug in and instantly offer all of their customers a yield service, which is effectively managed by Accrue. So I'll be interested to see how that product takes off. We're building a really strong pipeline already, but it's, we go from, we're talking to exchanges which have sort of 10 million customers between them. So that's a really, really quick way that we can start scaling assets as well. So, lots of cool stuff like that. And I think, we just need to do more of what we're doing now because, say, the company is growing at an incredible rate. So we just need to keep managing that kind of growth.
Well, congratulations on the growth. Congratulations for Accrue and everything that you're accomplishing. Phil, thank you so much for joining us today on the Early Bird Podcast. Before we wrap up the podcast, I just have one final question, and it's the big question for today's discussion. That question for you, Phil, is if you're going to sail around the world, what would be the name of your boat?
Oh, I mean, I've got a really embarrassing surname, so it'd have to be There She Blows.
Nice.
I think. There She Blows. Yeah, why not?
Thank you again to Phil Blows for sharing your insights on cryptocurrency. And thank you to everyone for listening to today's discussion. We'll be back next week for another episode of Early Bird. Have a great day.